Hello traders, welcome back to another episode of the Traders Show. This is episode 11 of the Traders Show. So 10 episodes down, we decided to do the first 10 episodes to see a response. Gotten good feedback, so we think we'll go all the way to episode 100 and more. Anyway, episode 10, today we are
11.
Oh, episode 11, yeah. Episode 11, today we're two of us. I and Lawi, Caleb is not in. And we'll be talking about how to develop consistency. I think it's a trader's goal to always ensure you've developed consistency because there's no need to make money and give it back in the markets. The only way compound interest works for you is when you're consistently trading and making money in the markets. So that's the topic of the day. We're going to share some nuggets that you can use. Many people give up before they develop consistency, but we'll get into the nitty-gritties. First of all, let's go back to the markets. A bloody week in the markets. We've seen some volatility coming back into the markets. The VIX was up to 23, up from about 13, 14.
Yeah, to 23.
To 23. So I think on Monday we saw a steep collapse on some of these markets. The Dow coming back from 35,000 to trade as low as 34,000. Oil coming back from around $72 a barrel to trade as low as $65 a barrel. And then today's on Thursday and we've seen quick rebounds in the last 3 days. So oil is back to $70 a barrel. The Dow is back to 34,850. I think Nasdaq is up to 14,878. The dollar trading at 92.75, coming back down from about 93.1. S&P 500 4,364. Gold 1,800. Gold has been quiet for this week. I think we haven't seen any major moves on gold, so we're trying to see where the markets will break out to. We're still watching the markets, but anyway, that's the market update. Lawi, how was your week, your trading week?
My trading week has been not the best so far.
Yeah.
Systematically trading still, but a couple of losses. The volatility that came in, spikes on my stops.
Yeah.
So I was stopped out of gold, short.
Yeah.
I was stopped out of GU, GJ. So yeah, a couple of losses for the week.
Okay.
But I'm having a good trade running on UK 100.
The FTSE?
Yeah, the FTSE. So I have a good trade running there, about 1% up already. So let's see if I'll recoup some losses with that for the week.
Okay.
Yeah.
On my end, trading wise, I've had like 3 trades or 4 trades. Also, I had some losses. I think I had some losses on. I had a win on oil. I bought some oil yesterday or the day before yesterday. But I had some long positions on gold, spiked out again. We haven't had much of a difference, but I'm back in. And I think I had some long positions on GBP USD also, was taken out, but the markets are back where I was looking for them. So it was more of a spike out of the markets. And I think the other position I had was GBP JPY also. The same day I had GU. That was taken out, but the markets again are back. So I normally trade systematically, just like Lawi said. And sometimes when you're spiked out, you get back. Sometimes you don't get back. So you have to make decisions systematically.
Yeah.
Anyway, let's dive deep into the topic. But before that, let's give some shout outs to some of the people who've been watching these podcasts. I think actually some of my friends have reached out to me and have told me it was very, very valuable. So even for those people who don't trade, apparently you're learning something from some of these things. And we're grateful and happy that this is happening. But anyway, on our comment section for the last episode, we did how to develop a winning system. Some of the comments we have. Someone is saying, could you guys be showing us your trades so that we can learn from them? We are planning on doing that very, very soon. So we'll be sharing some of the setups we take, like the ones we had, and the losses and the wins. We don't believe you can eliminate losses from trading. The goal is to manage your losses. So practically when we speak about having a losing week, we just lose a tiny percentage of our account or some minor percentages of our account. So someone else saying, Collins, love you guys, trading DNA confirmed. Mendes Houdini, hope one day to sit with you guys. So for Mendes, we'd recommend you send us some of your, just send us what should we send?
I request to appear on the podcast.
Exactly. To our email, thefinancialhub2@gmail.com. I'll give you a reply on the comment section. Someone saying powerful information, killing it, pure sense. So we've met with some of you guys. Shout out to Cosmos. So Cosmos was in our office some time back. We had a fruitful conversation and hopefully we learned a few things about how you should be trading markets. But anyway,
also a shout out to people who are listening on Spotify and the other
the other platforms,
avenues, the other platforms. So I appreciate so much for you giving us our time to listen to us. It's great. Looking forward to more engagement with you guys also on those platforms.
Yeah.
Anyway, let's dive into the meat of the topic.
Yep, you'll start.
Okay, I'll start, of course. So today we're talking about developing consistency.
Yeah.
But I think the first thing we need to talk about is why are most traders not consistent first?
Yep. So the reasons for inconsistency.
Yeah, inconsistency.
Yeah.
So when we've talked this a lot from the first episode.
Yeah.
That trading doesn't work in a snap of a finger.
Yeah.
It takes time. It takes years to develop everything to come into a solidify everything to come into a state where you believe in yourself, you believe in your strategy, and you believe that you will make money in the long run in markets.
Yeah.
So I think that the first thing why most traders don't develop consistency is they give up too fast.
Yeah.
Yeah.
That's a valid reason.
By the third month, you've not made any money. You have bills. You're in
3
school.
months.
Okay, I'm giving someone.
I get your point.
Some time. Okay, most people. I think 3 to 6 months.
Even a year is too little for you to develop
So,
consistency, especially without a guide. Yeah.
So someone has entered markets first month, second month, third month is trading. By the 6th month, 7th month, no money still.
Yeah.
The guy goes to another business. He opens a wines and spirit. Forex bana. Life is about like I have bills to pay. I have to survive in Nairobi or wherever you are.
Yeah.
So the pressure to also sustain yourself financially, and the fact that trading is not giving you that, and it's your main job.
Yeah.
Someone quits so easily before he or she even develop that consistency up. Okay, not even consistency making money, but consistency approach in markets.
Yeah.
Yeah. So someone quits too fast, and I think that's the main reason. Like most people don't develop even consistency in developing a trading plan, a trading routine.
Yeah.
Like your whole approach to markets. Then with that, results will come in
slowly.
Yeah, as an outcome.
Yeah.
So I think the reason is people giving up too fast. You need to give yourself so much time in trading.
Yeah.
Give yourself 2, 3, 4, 5 years to develop yourself first, develop your system, develop your psychology, develop your risk management framework. Then at the end of it all, the money will be the outcome. It will come if you develop all those things with time. So, but if you give up within the first year, of course, you won't get to the other side.
Yeah.
So I think that's the first reason why most people don't become consistent. They give up too fast.
Okay. Yeah. So for me, I think I'll start off where I'll give my reasons based on several experiences. So I'll start with mine. I'll share what I've observed from students, and I'll also share what I've read in a couple of books. But anyway, let's start with strategy shifts.
Yeah, strategy shifts.
So today you're trading like Ken, tomorrow you're trading like Lawi, the next day you want to trade like Caleb, and the following day you want to trade like yourself. So you've not
Four
really
different approaches.
Exactly. You've not really taken any time to develop a solid way of looking at markets, and you just keep on jumping from one strategy to another, from one different way of looking at markets to another. So you find someone maybe is trading technically, trades for some time, then he's like, no, these technicals are not really working.
On Friday, kuna NFP.
Let me trade now again from data releases. So NFP kitokea, you want to be in the markets. So first reasons first, if you're doing that, if that's your approach to markets, please understand it's very, very hard to form consistency in a random market when you're shifting from one way of looking at things to another. So I think the first thing you should say is inconsistency of process often leads to inconsistency of outcome. So consistency of process leads to consistency of outcome, just like inconsistency of process will lead to inconsistency of outcome.
Outcomes, yeah.
You can't develop consistency without forming a stringent process that you're following and you have back tested and is working.
Exactly.
And that takes time, like you said.
Mm-hmm.
It's not something that happens overnight. Because even if you develop a winning system, I I think the other important factor is for you to trade that system in different market conditions. So you trade it during a bear market, a bull market, a volatile market, a quiet market. And then you can be able now to tell how the system is performing under different market conditions. But once you don't have that working framework of testing things and also a consistent thing that you're testing, so today you're testing this, tomorrow you're testing this, then consistency will be something that you'll never get close to in the markets. So you'll just keep on complaining how trading is hard, how things are not working in your favor. But in real sense, you have not formed a solid approach that you can use to trade the markets. So strategy shifts is one thing I've observed among many people. So even students who come to us, they come to your class first, you teach them value area trading, they go to Caleb's class. Then when they finally come to my class, I ask them, okay, so which approach do you think you'll use? And often they don't have a clear answer. They're still lost. And I understand when you're lost because it's not so easy to pick. But I feel like over time you should be able to pick something and stick with it for a long time. Like if you're testing something, do it for a period of 6 months. Because like for me, I know for me to develop my system, I had to trade very many patterns. And then finally I've come back to just trading very few setups. So after observing some of the trades that made me money and some of the trades that lost me money, I have come up with trades that I can trade and setups that I shy away from and I don't look at them, or things that I don't do in the market.
And they have come from experience. Like from you, like you've developed that pattern. You know, this is a pattern of a losing system, and this is a pattern of a
winning system.
Or a winning trade or a
losing trade.
Exactly.
Yeah, so I even know which time frames to look at. I have a lot, but I've gathered that from experience and time, just like you said. So when you're starting out, ensure you don't keep on moving from one place to another. Today you want to trade, system hopping. Technically, tomorrow you want some algos. You want to develop robots. Like seriously, develop expertise in one area.
Exactly.
That's the thing we'd tell you. Develop expertise in one area. And then from there you can move on to other areas. Like for us now, we started with technicals, but we've been adding up fundamentals slowly but surely. So we're good at technicals. Like there's no chart you can give me and I won't analyze. That one I'm certain. I'll analyze the chart and I'll have a 50-60% chance of being right, especially on the direction. Timing, I could be wrong a bit. But the direction, I will be pretty right most times. I think 50-60% of the time.
Timing is what actually makes us destroy that hit rate.
Exactly. Because you may be like the trades you had earlier this week. You just came in early before the markets.
Plus the volatility.
So there are other factors which you have to factor in as a trader. But at least I know how to analyze things technically and any asset. So for people who don't know how to do something technically, fundamentally, and also technically, I think I just use a set of tools. I don't use indicators. I just focus on price action. So once you're trading, once you've decided you're going to be a trader, focus on developing expertise in one area, and then you can be able now to move to other things.
Exactly.
So I think that's one reason why many people fail so bad at developing consistency in the markets.
Okay. Another thing is, I think most traders are consistent, but are consistently losing.
Okay, that's true.
So, and that's why people give up now. You see? You're trading, you're putting effort.
That's risky.
You're putting effort, disciplined, but you're consistently losing. Why is that?
You have a negative expectancy system.
Exactly. So, and you'll preach this for forever. The moment your system is not a positive expectancy system, you will be consistently losing. So to counter that also, it boils down to you going back to doing your homework. You're going back to checking your strategy. If it doesn't work, you have to dump it.
Come up with a different thing.
Exactly. And back test it, take time with it, even if it take another 2 years again. There's no, I think that's why most people, someone is so fixated on his strategy. He's been trading it for 2 years inconsistently, and still is still so stuck to it. If you try and tell him or her that your strategy most likely high work because
of ABCD.
ABCD, he or she won't change that strategy. Atasemanga tu, I know it's one mistake, but I'll change it.
And often it boils down to that argument, like najua tu ni kitu moja nafanya vibaya. So once you have that assumption, it's very hard for you to change your mind.
Exactly.
And one man that I really love called Kenneth Galbraith, who was an economist, once said, when given an option between changing your mind and proving what you believe, almost everybody gets busy on the
Proving a point and proving what you believe in. Exactly.
So,
Trading needs you to be very, very dynamic. If something is not working, adapt to the other side of the market.
Yep.
If technical is not working for you, like that guy, is it from?
I know the unknown market wizards guy.
Yeah, I think it's Mati Schwartz. He said for 10 years he traded fundamentals.
And then he changed to technicals.
And that's when his system started working. That's when he made the most money he ever made in markets.
Yep.
So like being adaptive to change also. If something is not working for you is very, very important.
Yeah.
So and that's why we always tell people, because for me, I've interacted with so many students. And I see a strategy and I'm so certain this strategy does not work. And a strategy
has many loopholes.
A system. Okay, let's talk about a system. Because one, the system is flawed risk management wise. The system is flawed psychologically wise. The system is flawed even on the way of approaching markets or a way of looking at trades. But when you try and tell this person that, let me just try and help you on one or two things, maybe even on risk management only.
Yeah.
This guy is saying, you are too conservative. Me, you see, and, and this guy is losing consistently, and he's coming to you for help.
Like when
you try to help him, ataki could change. No, exactly. So like that, I think it's also ego. Like, you're
getting attached.
You're getting attached to like you feel like you're like, Taras can't tell me how to trade. He's not a millionaire. Or why wananiambia nini? Exactly. So like, I might not be the best trader in the world, but I can give you a few nuggets that can also make you better.
Yeah.
So I think that the fact that most people don't want to listen to pro traders, don't want to listen to do even research from. Because for me, I think also I've learned so much trading from learning about pro traders, Jesse Livermore, Stanley Druckenmiller, all these hedge fund managers, Ray Dalio, and I can say certainly Howard Marks. He's the one who has taught me risk entirely, understanding that there are so many risks in markets. If it was not for me to cool down my ego and accept that I don't know how to trade, let me learn from these pros and pick a few things. I don't know their strategies. They don't use the strategy I used to trade.
Yeah.
But they have picked some psychological nuggets from them, some risk management nuggets from them, and I've adapted it to my own strategy.
Yeah.
And it has boiled down to now forming it according to my own personality. So it's always important. Like if you know someone is better than you,
follow them.
Sit with him, sit with her. Like just for an hour or two, just try and get a few nuggets about how this person approaches markets. It will change a lot about maybe one thing you're doing that is making you not become consistent. And I think for most people, it's psychological and risk management. Yeah. So you can just come to me and I tell you your system, your psychology is flawed. You get stopped out, you re-enter a trade. Not systematically, but because you want to recoup losses. Revenge trading. And someone knows that, yes, but like subconsciously, like you don't know that, but you're doing it.
Yeah.
Uju una revenge trade. Una believe I trade iko fiti bado. Like you try now and convince yourself into a losing trade.
Yeah.
And I think also is losing objectivity. You see, losses comes with losing objectivity. Like the moment a trade goes into your side,
the frustration,
exactly.
Yeah.
The moment a trade goes to your side, most likely you won't be you'll be calm.
Yeah.
But the moment markets are going against you, you over leverage, over position sizing. If you lose on that trade, most likely you'll come back in.
Yeah.
Because the loss is too big, and you want to recoup those losses. I think it's in human nature also.
Yeah.
To want to, you don't want to have that losing scenario in markets, in yourself, in your company.
And if that's your reasoning, it's very hard again to make money in the markets.
Exactly.
Because I believe you must accept losses for you to trade proficiently.
Yeah. So
just like you're saying, just to add a point, I also believe most people have not developed an edge in the markets.
Exactly, an edge.
So I remember I was reading an article by Dr. Brett. So he was saying he normally coaches hedge funds, but he decided to give retail traders a chance to get his services. So he told them, okay, you just send me your trading and send me your psychological issues and explain to me how you trade, and I can see how I'll help you. I'll choose a group of people who I'll be coaching. He received so many applications, obviously, but 98% of them had pure vanilla. Kwanza he calls it that, pure vanilla technical analysis. Like there was no edge.
No edge.
Hakuna kitu inakupea advantage.
Like there's no difference between you and the other million traders.
Exactly.
In the world.
You're taking positions in the normal way. Your entries, like hata una a specific set of rules that
for yourself
limit you to doing certain things in the market. And he said, if that's your trading, as much as you may be indisciplined and all these things, you're failing not because you're indisciplined and all this. It's because you don't have a working system.
Yeah.
You get? So that's one. But now coming back to the discipline issue. Now, after you've developed an edge and you're sure the edge is working, the next biggest challenge you have is being disciplined enough to follow that edge. And you have to be disciplined in many things. After you lose, you don't come back to a trade. When there's no trade, there's no trading. Like, it's some of the setups I never took for this week were very good setups, but they're not in my niche.
Yeah.
So I decided to stay out of them.
Yeah.
And if you tell someone that, they may ask you, okay, why? Si ulikuwa unajua itaenda huko? The students say, si ulijua itaenda huko? Si ungeweka hata 5%.
Exactly, yeah.
Because like when people watch the Zoom sessions, they're like, hey, you guys, you're getting like all these directions.
All setups are playing out well.
Exactly. But you don't trade them. Why? Because I've learned over time that you need to develop an edge and then you need to be disciplined enough to follow that edge. I think that's how you make money in trading. There isn't a shortcut. If you don't have an edge, there's no money.
Exactly.
But if you've developed an edge and you're disciplined enough to follow that edge, there's a lot of money.
True.
You get?
Yeah.
And if you have an edge, you'll find that most of the times you're not in the market. If your edge makes you... If you're trading robotically or using algorithms, then you might find that, you're in the market a couple of times. But once you're trading systematically, discretionary, and you have an edge, I feel like knowing when not to bet is also an edge.
Yeah.
Because when your edge is not
that's
present...
very valuable. Like knowing when to bet and knowing not to bet.
Yeah. So you know when not to take a trade. You're just out of the market and you're doing other things. So that's one of the most important things that a trader can learn. So if you learn how to stay out of the markets until your edge is present, like I have a couple of setups that I'm watching. And if those setups give me a signal, I'll be very quick to execute them. But the risk that you're talking about is, I think, what kills very many people in trading. They are so emotionally attached to trading. They assume that just because they did the process, they analyzed markets, they must win. That's an assumption. You must be very, very willing to take a very, very good trade and lose.
Yeah.
And once you lose...
As well as say, like, a good trade can be a loser.
Or a winner.
Yeah, or a winner.
Yeah.
It's still a good trade.
Still a good trade, yeah. So like the trades I took this week, I don't think I've taken any bad trade.
Yeah, me too, yeah.
All those trades were very good trades systematically.
Systematic trades, yeah.
But they just never worked out well.
Exactly.
So that's a part of trading. And if you've not accepted that element of losing, please go back and review some of the things that you're doing. Because I've not met any trader who's right 100% of the time. None.
Zero.
None. Doesn't exist, right?
No one.
Yeah. So, in fact, if you're really, really good, you're just like 60%. If you're 60% right, you have a good working system. Yeah, I think you're outstanding. But once you find yourself again with a system that's right only 10% of the time,
10, 20, 25, 30.
Tengeza pesa pia ni ngumu. It's very, very
exactly.
difficult again to make money when you have such a system. So that's another thing that I think is making people...
For me, I think another thing also is lack of a consistent trading routine. And that also faces me as a trader. Like, I'm still trying to perfect it, but trading routine is very, very important. Yeah.
And that's why the big banks, I think, beat retail.
Exactly.
Because they have at certain time you have to be working and they close their jobs at a certain time.
Exactly. So you need to know when you look for opportunities. You need to know which market open are you active.
Yeah. Which sessions are you trading?
Which sessions are you active? Yeah. Are you trading? So I think the fact that you're not consistent in looking for trades. Yeah. Today you looked for trades in Asia session. Tomorrow you're looking for trades in New York. The other day you're looking for trades at the end of New York maybe. So like the inconsistency of you looking for setups like that routine. And for me, I think also I face that risk this week. For me, I always look for my trades during early Asia session, between 3 and 5 a.m. Yeah. But I think it was on Tuesday, I woke up at 6. So all those trades had already moved almost 70% to my target.
So you missed some of the best opportunities
for the week that could maybe have recovered my GJGU losses. Yeah. So like in the moment you miss that trade,
you're done.
Imeisha hivyo. Especially for a setup like mine, you have to be very, very almost perfect on timing.
And entries,
yeah. Yep. The moment that setup goes 20-30 pips against you, okay, inside the trade and you're not there, the risk reward is already spoiled. So that consistency of looking for trades and like basically just your trading routine.
Yeah.
If you wake up at 5 to trade and you sleep at 9 p.m. Every day, try and form a consistency approach towards that. No, si siku ingine uliamka hata 11 asubuhi. Kwanza London hata ishapita. And you're looking for a setup that you always look for in Asia and London session. You see, you'll miss opportunities, very, very good opportunities, and that will force you now to jump onto bad trades. See, just because you have now room for exposure that you didn't expose on the good trades, now you start exposing it on bad trades and you get losses. So I think that inconsistent trading routine also leads to inconsistency in results.
Yep.
Yeah.
And to add on to that, Van Tap has I've included it in the psychology of trading course module that you're working on. So he has 10 tasks that you need to do daily.
The 10 trading tasks,
So just like you said, like for me, I have reminders set on my phone. I'm also forming it. I'm not as accurate, but I'm forming it. So my first early morning check, there's the early morning check. So 2:30, looking for Asian session. How is Tokyo opening?
Yeah.
I'm up. I'll spend the next 15-20 minutes trying to see if there's any setup, any entry. I'll go back to sleep. Yeah. Then I'll wake up officially at 5. So 5 magnet trades. I want to see how they're doing. Yeah. That's morning check. Yeah. Then I have 8. I have reminders for this. So I've set reminders on my phone to remind me, and it tells me. Then at 8 again, I'll check if the trades that I was talking, probably if I never found an entry, I was still waiting for a certain level to be attained. Yeah. I'll be watching. If I was in a trade, I'll try and see how it's running. 10 a.m. London. I want to see how London opens. Yeah. So if London opens, where are the markets? How is the first 15, 20, 30 minutes of London trading? Because like I think on Monday, London opened sharply lower. Asia first was lower. Then you could see London also moving lower. So Monday was quite a good trending day for you to be, if you're trading in the markets, be in the direction of the trend. Because you could see clearly the markets are moving down. You get. Then you have, again, 2. I confirm how London, because London now have gone for lunch. 3:30, I'm looking for New York. I'm preparing for New York. By 5, I want to see how New York has opened. Where are prices? Any data releases? And then 8, 9, I'll do my daily debriefing. So journaling the trades I took and writing some of the things that I think I need to learn or to perfect on. Just like you said, you can't develop consistency without having such a framework of trading.
You see how you've set your whole trading day from 2:30 a.m. to 9
p.m. Like
and it's almost consistency. Maybe some days because you're busy in the office meetings.
Exactly.
Yeah, but it's almost always consistent.
Yep.
Yeah. So now problem with new traders, they want to look for signals.
Yeah.
They want to wake
up. And I think I learned
time.
even the idea of reminders from Gitosh.
Yeah.
Initially, I had it in my head, but then I realized it's easy for you to forget.
Yeah, it's so easy for you to forget.
So I could see like he'd tell me, hey, it's 3:30, kuna data release.
Let me go and check my trades.
Acha niende niangalie my trades. 4:30, it's New York. So I observed, so there's
someone 13 years experience in trading.
Exactly.
13, 14 years. You're still using reminders.
Exactly. You see, and you're a newbie now. You really need to think hard about some of those things, just like you said. Now, for me, I think the challenge is developing the discipline and consistency to follow it. Yeah, so I have the framework now. The challenge now is forming that strict discipline to follow that process. And those are some of the things that will make you decide not to do some things in your trading. Like during your trading week, I'm not going to maybe leave the office and go to other places or do other things, especially if I have a position. You get
exactly because you're waiting for a good position.
Exactly, because even after you've executed a trade, there's the aspect of managing it. Yeah,
exactly.
Because let's say you have I like a very good example of, let's say you have a trade. Like for me, how I trade personally. Let me use my trading style. If I have a trade, let's say I took a trade in Asia, I'm very keen on how London will open and the levels that will open at. For example, if you're getting close to a demand level and I spot some demand coming back into the markets of London, I may be very willing to liquidate that position if it's not working. I don't believe in
trade management.
Exactly. So I'll try and spot, is momentum, and I won't be quick to execute or to make the decision, because I know there are fake outs also in the first 30-40 minutes of trading. But I can tell, I think on Monday you could easily tell that markets will open sharply lower. because London opened and you could see some momentum coming to the markets, downside pressure, and you could tell markets will really, really move lower. So if you don't have that framework and you assume that you'll attain financial freedom by not working for it, just not looking at markets, forget about it.
Forget about it, man.
You won't go very, very far in your trading system if you don't have those reminders which are set very, very well for you to be making decisions on and what you're watching. So we're talking about the 10 tasks. So the first one is the stocking. So you need to develop low risk ideas. So already you know which setups you're hunting for.
Exactly.
You get.
And you know all these things, most people don't have them already.
Sasa kaa una kwanza, ujue kwanza
That's why you're already inconsistent.
Uko mbali sana. You can't even get close to being consistent.
Like, it takes a lot of effort, like a lot of time for you to like just bring a few things together in trading for it at least to make sense first of all. Because most times you're trading but unashanga mbona you make money here, lose it there, and you're losing more than you made.
Exactly.
See, it shows one, your risk reward is fucked up. It shows your psychology is not well, your system is not well. So like until you bring all those, you consolidate all those things together. And as you're saying, like your ideas you're looking for, there are low risk ideas, maybe kuna zingine ni high risk ideas, but you have to know them. Exactly. Continue on the 10 tasks.
You develop low risk idea. Then there's the stocking. So you keep on stocking. Like you said, you normally know your entries come at a certain time. So at that time, you don't wake up to take a trade. You wake up to stock if you've gotten an entry. And then besides stocking, now there's action. Once the signal is present, you have to decide, okay, I'm going to take this trade here. I'm going to risk this amount. You make that and you decide where is the stop loss, where is the take profit. Then there's the trade management. So here you're looking at how the trade is faring. Should I keep holding? Should I add to a position? If you add, should I exit this trade? You have that framework. Then you have finally now the closing of the positions. After you close your positions, and then you have the daily debriefing. So you look at how your day was, how your trading day was. Were you emotional at some points? Did you make some emotional mistakes? Did you stick to your trading plan? Without that attention to detail, it's very hard to make money in the markets. It's very, very hard for you to sit down and make money consistently in the markets. And that's why I feel like majority of the people can't make money in trading. Because if people understood what it takes to be a good trader, most people wouldn't even be interested in trading anymore.
Exactly.
Like, as much as there's a lot of money to be made.
Like yesterday when you were reading that book, when you got that book, A Global Macro, then you were like, Ken, do you think if a new trader was to be told, like, you need to read this whole book and understand it for you to even deposit $100 in your account?
Many people will shy off.
They'd
be like, staki kitu tena.
It's too much work now. But that is not preached as people advertise trading. It's not preached that there's a lot of hard work in it. People preach it like it's something I teach you in a month.
And you are there.
Deposit your money.
And you start making money.
Be a millionaire. I think that it's not a stereotype. It's a fact that if you follow what most people say in YouTube, what most people say on their Instagram, most likely you will never be consistent in trading. Because you'll always be looking for a wrong idea in markets. You believe in something wrong. And the moment you're stuck into a wrong belief, it will be there for the rest of your life. You'll be thinking you can multiply $100 to $10,000, which will never work.
That's one of the reasons. Again, I was actually coming to that. Many people don't develop consistency because of that. They're stuck to their belief systems and they don't work in the market.
Negative beliefs and you work on markets.
As you work.
Exactly.
So you need to work on your belief systems. For example, you need to learn to be wrong.
Exactly.
Like, learn to be very comfortable.
And love being wrong.
Exactly. Very comfortable being wrong. Because I was actually teaching one person on Monday and we were going through the psychology module. So I was telling them, sometimes you really need to stress test your thinking. Like you need to challenge your opinions.
Exactly.
You should be assertive, yes, but be very careful about what you're being assertive on, especially if you're not sure. But he was like, no. She was like, no, you need to stick to your opinions. Because even the other guy who's sharing opinions, they could be wrong.
Exactly.
I was like, are you serious? Like, there's the danger of sticking to a belief system which is negative. It's not working.
It's not working in markets.
It's leading you to the wrong place.
And most belief systems that work in normal life conditions don't work in
trading.
Markets. Yeah, exactly. Like, that's the challenge about markets. It needs you to throw away your normal human mind and so much unlearning.
That's the
word.
word.
Unlearn now the real trading. Because it's something so different. Like we've never been given this thing in our lives since
Yeah.
since we were kids.
Yeah.
Like when you were a kid, you were bought for planes, trains.
Mm-hmm.
You knew that like your main goal maybe was to become a pilot, you see.
Yeah.
But ukiwa mtoto, bro, no one gave you a toy of stock markets.
Yeah.
You see, so it was never in your like biological
DNA.
Exactly. So the fact that it's something so new to you, and you want now to make it your whole life. You see, because trading, I think, if you're not looking to trade full time, also, like if you're not if trading is not your main job, also, most likely you don't know what you're doing here. Exactly, because trading needs you to be on the job every day.
What did Baruch say?
I think it was Livermore, yeah.
A speculator
needs to be on his job 24/7.
Or
he has no job to be at. Like, you see how Ken has said, from the moment he wakes up to the moment he sleeps, that's every day, right?
Yeah.
There's no day there's a week. Even most likely, even when you're in vacation, you'll take a few hours.
I'll check markets.
You'll check markets for a few hours.
Yeah.
But someone wants to come into markets, not giving it the hours, and try and be consistent. It will never come to you.
It's a dream that will never be attained.
Exactly. And I think it's, as you said also, it's just sticking to wrong beliefs in markets.
Yep.
So also in markets, try and read a lot. Try and learn from these pro traders. They'll show you that trading is very, very different from what you think about.
Yeah.
Or from what you think it about, from what you believe in, like what it is.
Yeah.
It's something very, very different. I'm so sure, if someone to just sat me down when I was starting to trade, and actually someone told me that.
Mm-hmm.
Mehdi, I think I remember the story of Mehdi, the friend to my sister.
Mm-hmm.
She was trading. He was trading back in 2015-16. He had made about 100 million. So I was also interested, man. Hey, this guy is a pro, nini. So I was sitting with him down in a club talking. And he's like, "I love you. Hivi tuachana nayo bana.
Mambo ya trading wacha watu wa.
Mambo ya trading wacha watu wa trading bana." And I nikashangaa mse, mbona ananiambia hivi? And he also told a friend of mine, Marian. Akamwambia pia, Marian, hiki tuachana nayo. Hautaweza. So
and that's the thing we've actually been debating in the office. I believe trading is like a calling.
Exactly, man.
Many are called, but few are chosen. Like few, by the end of the day, very few people can trade for a living. It's a demanding job. It's a stressful job. It's a complex job.
Yeah.
So it's not something that anyone can do.
Yeah. So for me, when Mehdi was telling me not to give it, you focus on your engineering. Now ndo naelewa what this guy was saying.
Exactly.
It's so true. If you're not willing to put like your whole life into trading, just quit it or give someone your money to trade.
Yeah.
You make some money out of it.
Or invest long
term.
Usitrade daily.
You
know Bitcoin usahau your story.
Yeah, just be an investor because speculation. This business actually it's called speculation, not trading. You speculate on future prices. It's tough, man. Then the consequence of trading is that you lose money. Not that you lose money and time. So it also hurts even more because for most businesses, maybe you'll close your shop without sales, you see. But maybe the losses will come maybe from a burn rate vitu kaizo. But imagine you have a supermarket, but someone is coming to steal from it. You see, not that people are not buying. Someone is taking away your money,
and you're working very hard.
And you're working very hard, and you're in that supermarket. No, watu wanakuja kuchukua pesa yako wakitoka.
Wanaenda tu.
That thing is mentally tormenting. Like losing money in markets is mentally tormenting, and until you detach from money. And to just add to what you're saying, like I remember reading William Eckert, who's one of the very, very good traders. And I think listeners, you're seeing how we're talking about. We've been reading. We know these people, so research is also important.
Very, very important.
Yeah, continue.
So Eckert says trading is a positive game monetarily, financially, but it's a negative game emotionally. Whether you're making money or losing money, it's a negative game emotionally. Why? Imagine you've woken up in the morning. Like for me, yesterday, I had a perfect example. You remember that gold trade I had? The squeeze back down to almost getting to my exit.
To your stop, yeah.
So you imagine now you're almost losing $25, $30, $100, $300, $500. Then the markets come back up and you end up making $1,000, let's say, an example. Now in such a scenario, let's have made money. But has it replaced the pain I had when I was almost losing? Nope. No. As much as I have the money, yes, there was that pain that I had to go through in the early sessions of London, and then in New York things changed.
Yeah.
So emotionally it's a negative game, and you can't do it if you're not willing to go through that. I think ultimately you have to be very, very interested in solving the puzzle of where to buy, where to sell, and spend a lot of time thinking about it. Because another thing that I think we have to talk about is you have to spend a lot of time thinking about trading.
Yeah, bro, like if that Medi guy that I was telling me not to trade, if I just sit down and ask myself, why is he telling me this? Ningekaa hapo chini nifanye research yangu tu na most likely singe trade. You see?
Yeah.
But also, as you said, many people are called, few are chosen.
Yeah.
We entered the markets. Me, Marianne.
We were many by the way. We were a couple, but few are remaining.
Yeah. And that same guy told me and my other friend to quit, you see. But in the long run, one quit, one is still running, you see.
Yeah.
So that's your aspect of you're saying about many are called, few are chosen.
Yeah.
So like if you take so much time to think about trading and come to accept that this thing is a negative sum game emotionally, it will take you so much time. Okay, it will take you so much time to learn. It will make you like you lose your bankroll for a few years.
Yeah.
And accept it. See, most people don't accept it.
Yeah.
And that's why most people, as I said on my first point, they quit. You see,
before they can even
your first year you've been disciplined, working hard,
motivated.
Bado doijakam. You're actually losing money.
Yeah.
Most people just quit.
You end up.
That is because they didn't take so much time to think about trading as it is.
Yeah.
Ukuje ukubali shit, it can take 4-5 years kwanza tu solidify foundation too. Then now maybe I'll mark up my capital in the 6th, 7th year. That process, that's all like a long-term process. Most people don't have that thinking about what trading really is.
Yeah.
And also, as you've said, it's because of social media, brokers, like they're just like marketing it.
Yeah.
Like it's going to the market and buying tomatoes. It's not like that, man. Shit ni emotionally, I've said, and for forever, even when you're 70, utakuwa nakumbukanga tu, hey, the things I've gone through in trading.
If you just look at Dalio as an example, he talks about the position he had in pork bellies and markets opened up, limit up for almost 10 days.
10 days, yeah.
For you 10 consecutive days, you're losing money.
And you can't get a moment to liquidate because markets open, limit up.
The following day, limit up. So it's a very, very competitive field. It's a negative game emotionally. Oh. And if you're not ready for working in some of these things, then it's very, very hard. But anyway, I think we've talked about what causes inconsistency. Now let's share some tips on.
Okay, I think let me finalize on one more thing that leads to inconsistency in trading. It's basically lack of capital also. You can't be consistent with $1,000, $500.
Why?
Okay, I think one, it doesn't allow you to apply the correct risk management strategies. You see, with $1,000, and this is where now people break rules.
What's 1% of $1,000?
$10.
Okay.
You see,
so there's some markets first you can't trade.
Yeah, exactly. You can't trade some markets, and now since someone can't trade some markets, leverage. You see, put your leverage 1:500, 1:400. So that you can get that exposure to markets like gold, Dow, you see?
Yeah.
And markets like gold, $10 stop on gold, that needs you to have a 0.01 on 100 pips.
Yeah.
Most people don't have that 100 pip stop. See, for me, from my experience in teaching people are very, very conservative on their stops.
Like 10
pips, 15 on gold.
On gold.
See? And that's because your account is too small and you want to limit that risk to 1%.
Yeah.
It can't allow you. So I think undercapitalization also is another reason why most traders are not consistent. And also because someone has a $500 account and wants to do magic with it. You can't do magic with a $500 account.
Forget about that dream.
Yeah, even if you make 10% for that month, you have $50 only. And you've worked so hard, you've woken up at 2:30 a.m, sleeping at 10 just to make $50. So psychologically, that guy will start fucking up that account because he wants now to make not even big returns, a percentage wise, because like at that point he knows 10% is actually good.
Yeah.
But financially anaona $50 ni kidogo, I need to make at least 100. Akumbuki 100 ni 20%, which is an astounding return. So the fact that you have a small account and you want to make more money from it, it destroys everything. Most likely you put a bigger lot size, and that is the one that gives you the biggest loss.
Okay.
Goes back to inconsistency. You had a good graph, greed ikakam kwa hiyo account yako,
things went south.
Yeah, exactly. So I think also undercapitalization also is another thing. But yeah, we can move on to how to develop consistency.
So I think first I'd start with a few tips. One, the first goal of a trader is not to make money. It is to learn to not to lose money.
Yeah.
Because chances are you lose money. Survival. That's the word. So your first goal is not even to make a lot of money. It is to be trading 3-5 years down the line. And that's the first thing. That's your first objective as a trader. To make sure you retain as much capital as you have. For you to consistently learn how to trade well and to make money in the markets. Yeah. That's one. And how do you do that? You start with a small position size. If you're starting out in your trading, exactly. You're starting out in your trading, first look for asymmetric risk-reward ratios. 1:3, 1:2.5, 1:4, if you can get it. Also, besides that, position size, small. Start with a small size when you're trading. Don't start risking out 2% per trade.
Yeah.
Because you can have 5 losing trades in a row. It's
you're
normal.
Down 10%.
Exactly. You're down 10%. But now if you have like, let's say 0.5%, that's what I'd recommend to most people.
As you start out,
yeah. And that's why, like you said, when you're undercapitalized, there are very many things working against you.
Now you've gone even lower to 0.5%.
Exactly.
$100. Actually, yeah, most people actually start with $100 to $200. And I'm saying that from my own experience. Nilianza na hiyo account.
Yeah.
I had only $100 when I was starting learning how to trade. We had to accumulate money, me, you, and Malims, to get at least $300. You see?
Yeah.
And this is 3 people managing a $300 account. Akidali wagetuona.
Hii game mwache tu. Si yenyu. But anyway, yeah, so you need to save up enough and then come up with a very, very, very strict risk management principle. By the end of the day, many people don't learn to trade because they lose money before they learn to trade.
Yeah.
So uko na 2000 USD, unakuja unaanza kuchukua wild risks. Before hata ujue kuposition size vizuri, before hata ujue which patterns work for you, before ujue which strategy, before you learn psychologically how to take losses, you're out of business.
Yeah.
So start with a small size. Start with a very, very, very small size. Like, ensure your trading yako sasa is separate. First of all, you detach from money.
Yeah.
The money will come, just like you said. But start with a small size. Exactly. Start with a small size. Develop that consistency. Develop that routine. Develop the patterns you're trading. Develop the markets that you're trading. Then over time, you can jump now to 1% risk, 1.5. Eventually, you'll even get to 2% risk.
Now you leverage on something you've developed over
exactly time. And you, again, competence will come from confidence will help you build competence, just like competence will help you build confidence. So it's a reflexive relationship. But you need to start at a small size and then slowly build it up. But if you're starting out in your trading and you just like Dr. Brett says in his book, the goal of trading is to make as much mistake. The goal of trading is to make so many mistakes when you have $10,000 on the line, so that when you have $1 million, you don't repeat those same mistakes on that account.
And trust me, those mistakes, like I've seen people blow a lot of money.
Yeah.
And it's because they think that money is it's
too much
to blow.
Exactly.
We've seen trading losses in history to the notch of $10 billion.
Yep.
Like there is no too much money you can't blow in markets.
Hey, tender.
Markets every day. $6 trillion rotates. $1 trillion
around the market.
Yeah. Even if you have $1 billion shillings in your account, it can go in a flash of a second.
Yeah.
Just remember the story of Anthony Wins?
Yeah, the guy who lost $10 million.
$10 million in one day, 7 trades out of business.
Yep. And that's a billion shillings. Yeah.
One day out of business. So it all boils down to
the Kenyans who lost 40 million.
The Kenyans who lost 40 million. They were telling that, actually, it was a friend of ours who came to the office and told us that story. they thought that this 40 million
Was a
this
lot.
margin is a lot. Haiwezi isha. madness in markets. So and I think as I said, like most people don't understand like how markets work. You see, you're like a wrong belief. Una belief that this money is too much to
It can't go.
That's a wrong belief in markets. And
That's
the
why
moment
you
you have
go
such
wrong.
a belief, that's why you go wrong. Itakuja tu kuprove with time, because markets, I believe markets really rewards mediocrity. Rarely does it reward mediocrity. That you break rules every time, you're not consistent, you're uamkange kutrafta trades, au kujange ofisi, itakuwa ngumu. Exactly. So I think it's important first to,
And that's what people assume trading is all about. They don't think it's a day job. They think it's a job where you just do your things. The only freedom you have is you can work from anywhere in the world. And you can also choose your times, but you have to put in the hours. It's not like
the fact that it's all, the freedom also comes the fact that it all boils down to yourself. Like no one else can make you a better trader.
Exactly.
So it all boils down to your effort, your personality, you yourself having that long-term thinking. You see, your partners in the office, if I have a short-term thinking and you have a long-term thinking, even if we stay in that office for 30 years, you'll be making money and I won't be making money. You see, so like no one else can make you a good trader in markets. You have to do it yourself. You have to do the homework yourself. Know what is not working for you. Improve on that. Give it time. Such things. So the moment you don't want to work on yourself in that perspective,
it will be very
consistency, tricks.
So that's one. Start with a small size. Another one. Develop an extensive trading plan. Like, have a plan, man.
Ken, since the funding program started, we've been requesting our students to send
trading plans
for them to send us their trading plans. And out of almost 40, I've not seen any detailed trading plan.
Exactly.
None.
Inakwanga tu hapo.
And this is someone who has been guided. You see?
Exactly. You can imagine someone who's not guided.
Someone who's not guided. Hata ananga yo plan kwanza. No plan. And no plan hata ka una plan kwa trading kwanza.
Hata huwa bad plan sasa.
Hata bad plan.
Because you need to develop a very detailed plan that you'll use with your objectives well set. Like, I'm not planning to do any of these mistakes. I'm not planning to look at these things. So that when any time you break a rule, you can constantly be aware that I'm breaking a rule. Without a plan, even you don't know when you're breaking a rule. You're just everywhere and anywhere. Mahali popote, you're not
like
focused.
You don't have metrics to measure your decision making strategies in markets. You know, like for me, like at the end of the day, I'll come down and sit and like reflect on this trade. Like when I was entering the trade, did I force anything? Like did I try to squeeze my risk reward to a certain level? Like you just try and reflect. Then my trading was good. Then there's sometimes you'll see this trade it hadn't given me a signal yet, but I entered. You see? Those things, if like awareness of how you trade is also very important. Awareness, exactly. Awareness of when to break rules also is very important. Unajua hii nimebreak rule,
lakini nimebreak kwa sababu ya hii na hii na hii.
Unajua sasa kuna wengine umebreak rule hata ujuli break kwa nini. Unakuja sasa una reflect hii loss yenyewe.
Main trade gani nilikuwa nachukua.
Exactly. Like reflect on your trading plan, your trading journal, unashanga hii trade yenyewe, system nimetupa. But as you took that trade, it made a lot of sense. But ukireflect, like reflecting back on your trades really helps you creating consistency, because it will help you create that framework of as you're saying, you know, this is a pattern of winning trades, this is a pattern of losing trades. But the moment you're trading, like you don't have that you don't look at trades after you've traded them, like you don't journal your trades, and
that's risky.
You're saying it's
daily debriefing.
Daily debriefing. Ka ufanye hiyo kitu kwanza, you won't learn from those trades, and that's where you learn trading from the trades you take. I can't learn from your trades most likely.
You won't.
I learn from the trades I took. The losers and the winners. So the moment I don't go back to reflect on those trades, like I see you most time in the office, you go back to look even at trades at 2017.
Naangalia journal.
This is how I was trading. Unakuja unaangalia the reason I never became consistent. Then you start looking at how you improved on picking setups, minimizing setups, minimizing indicators, minimizing trading tools also on your chart. Like my chart in 2017, see same on my chart size. exactly. Like nani because nimekuwa nikireflect back on my trades.
Na evolve
Na evolve yani. And I learn from them. So most people actually don't want to learn from their trades. Someone is losing consistently, lakini haendi kuangalia mbona ana lose kwanza. Angalia the reason ni nini. So like you need to go back and look, is it position sizing? Is it risk reward? Is it psychological mistakes? Is it entering too many is it over trading? Like there's so many diseases in trading that you need to diagnose. Uangalie ni ugonjwa gani niko nayo hapa.
So ugonjwa.
Ni ugonjwa bana.
Niko nayo mingi.
COVID iko huko. So like you need to always after a trade analyze it. Angalia, like was it a systematic trade? Was it a trade I broke a rule somewhere?
Yeah.
Let's say you have a criteria, one ABCD. Did they enter apart from D not working? Unajua, like this trade worked, yes, but I hadn't. I met a criteria because like if you don't now tell yourself that next time a trade will come, you'll enter it and it will not be become a loser. But if you learn from your previous trade, even though it was a bad trade but a winning trade, you must likely now say, inaini kimungu tu. But I learned from it. I won't repeat. Even if it was a winner, unaangalia unasema this was not a systematic trade, but it was a winner.
Yeah.
So most likely you'll form that mental picture in it. That next time also you'll remember, that was not a good trade, so let me avoid it.
Yeah.
So learning from your trades also. If you learn from your trades, you'll most likely build some consistency because now you'll start seeing patterns.
Yeah.
Hii pattern haiko ina working hii time. This is the pattern ina work. Unaangalia it trades nilikuwa nazichukanga what time, is it Asia ama Euro session?
Yeah.
Unaangalia hizi trades za Asia zilikuwa zina work sana, so you'll be consistent in looking for trades during Asia. But the moment you don't know which trades were working on which time frame, hata ujui time frame kwanza, hata ujui session. Hii time nyingine ulikuwa kwa daily chart ilika work 15 minutes ukascalp huko ukabuy signal pale. Inconsistency of processes umesema tu leads to inconsistency of outcomes, and like in many things, routine, strategy, position sizing, exactly. Hii wiki ulikuwa na risking 0.5, next week uko 1.5. How? You see?
Nilifeel.
I felt that this trade was good. Yeah, so like always be consistent, at least for 6 months. If you're position sizing in this way, for 6 months position, like try and around that, in that way. If you've been trading, let's say 1 hour chart and the 15-minute chart, focus on that for at least 6 to 1 year. When it work, then if it works, stick to it. If it doesn't work, at least now maybe let me now try and test the 4 hour. Unaona? Yeah. Maybe easy day trades zinanipea too many trades na over trade. Unaona? So the moment you went to analyze your trades, how to be consistent? Because like your trades ndo where you learn from, and you always say you can't learn without trading live markets.
Yeah.
So
kwa demo huko pia kuna lessons.
Exactly. Hiyo pia ni kitu kingine. So umespend 2 years kwa markets.
Kile trade live 1 month. Uja
trade live ka 2-3 months.
Watch markets.
Uko tu watch markets kwanza. Hapo hakuna lessons.
Trade hata kidogo.
Yes, hapo sasa. You need to make those trades, lose, win, and actually come back and learn from them.
Yeah.
So that process, like it's a lot. That most people actually, I don't think, have that energy to follow such systems. Yeah.
So I think another thing that I can talk about is working on yourself. So why am I talking about working on yourself? I do believe a winning trader or a losing trader does not start from when you start executing position or following the processes that we talked about or all these things. I believe one of the things that determines whether you make money or lose money in the markets, first of all, when you're starting out, is your mindset.
Yeah, your mindset.
So how you're thinking about markets already can tell me, are you a winner or a loser? For example, if I meet you and you're thinking that there's a way you can trade without having losing trades, like immediately I know this is a loser.
Yeah.
If I meet you and you think that when you lose it's personal, immediately I know this is a loser.
Yeah.
If I meet you and I ask you what is your age and you don't have clear-cut answers, I know this is a loser.
Yeah.
So I believe working on yourself, changing your belief system, developing discipline, those are some of the critical things that many people don't work on.
Yeah.
And it's very, very hard for you to succeed as a trader without that. The only thing you can model out of someone is how they think.
Yeah.
Like by just chilling with someone, kumbe mse anafikiria hivi. So this is, and I think that's one of the goals of this podcast. The goal of this podcast is to change your thinking about trading.
Yeah, exactly. Like
it's an exercise in thinking.
Exactly.
Just think about some of the things we say.
exposing realities of trading, like tunataka tu tuambie watu manze what the game really entails.
Exactly.
Yeah.
So that you can think about it and then you can decide, okay, should I go on? Should I stay out?
Yeah.
What should I change about my thinking if I really want to go on? But that's one. You need to work on how you think about markets. And thinking comes from your beliefs, values, character.
Yeah.
If I tell you trading will develop your character, many people won't believe.
Yeah.
But I believe for you to be a consistent trader, you need to be very disciplined. The levels of discipline you must attain are not levels of discipline that any normal human being has. The levels of self-awareness that you must attain are not levels of self-awareness that people in
mainstream jobs have.
Exactly. Like you must test your thinking, you must be very self-aware. Hii kitu,
Like
it's not so much about looking at charts and thinking about, it's working on
developing your mental framework
Exactly.
for trading.
Yeah. So you need to sit down and do a lot of work on yourself as a person, as a
And
human being.
from your experience, like how have you tried to develop that mental framework for trading that helps you now become a consistent trader?
Wow, that's one. There's a lot of journaling to develop self-awareness. So one, I believe you really need to be self-aware of first what you're doing wrong. Like before you even start
you're
changing.
journaling emotions, not the trades.
Yeah.
So
I journal my
journaling of
emotional
emotions
experience
during trades.
Exactly.
During a trade.
Yeah. So if I'm that's daily debriefing.
Yeah.
That's part of it. Like how was my emotional experience? How objective was I? Did I do anything out of frustration? Like I observed long time ago when I was trading, I'd observe that anytime I had a losing trade, I had the tendency to probably look for another trade. Unlike when I had a winning trade.
Yeah. Exactly.
And that told me that there was a high chance I was acting out of emotions.
Yeah.
I was not really objective.
But that's one thing. After losing a trade, hata mtu kwa calm. After winning a trade, mtu kwa calm.
Unatulia trade ingine itakuja.
Itakam tu. Lakini
Lakini
ukisha lose,
stock
uko busy bana.
Na kuna trade wapi pengine.
Exactly. You want that exposure back.
Exactly.
Unconsciously. Yeah.
Unconsciously, you're not even aware. So over time nika observe, there's that tendency of, if I'm losing, I tend to be frustrated, and that frustration leads me to do some things. And I was able to break that pattern.
Yeah.
You get? So that came from just observing my journaling. Another thing is you can observe your mental states. Like I do believe you need to be aware of what's your primal mental state. Like where do you perform best? You get? There are days when you una trade, una perform, una make good decisions, uko in sync with the markets. If you don't learn from those experiences also, itakuwa very hard to tell when you trade well, when you don't trade well, when you lose confidence, when you build confidence. And that comes from real trading, real life trading experience. Yeah, you don't do that when you're trading a demo. Hata huwezi kuwa na hiyo commitment.
Hakuna ati kuamka 2:30 trade demo.
Utaamka kweli commitment. So uta avoid kufanya some of those things. You get? You won't journal, you won't do those things. So that's one of the things that I'd advise people use of a journal to create that self-awareness, and then that self-awareness can help you now break some of the patterns that you have.
Nice.
Another thing is you model. I believe in modeling. Just like you said, research people who are trading well. Try to understand how these people think, and then try to change your thinking.
Exactly.
If you're not ready to sit down and change your thinking, then tell consistency goodbye, because you won't. Not even consistency, just stop trading.
Yeah, that's stop trading.
Because trading will need you to change yourself. Market haita change. Ati sijui wache ati hakuna loser juu sasa wewe umejam.
Market haina emotions. Wewe uko na emotions.
Bas.
So market hata why they never talk to anyone. They are silent.
And it's one of the most, I always say trading is one of the places where competence is rewarded.
Exactly.
Like
mediocrity is never.
Exactly. You can't make money consistently without being competent.
Kabisa.
On one trade you can, on two trades you can, but make money 5 years man without competence. Make money 5 years consistently. Tuone wewe venyewe ni mzee. Hauwezi.
True.
So you need to sit down and develop that skill. It rewards that skill that you've developed. So those are some of the things that I think I'd point out.
Okay, another question
for yourself.
For your trading experience, what do you think made you very inconsistent during your early years?
One, had not really developed a good edge. So I was trading very many patterns. That is one of the things that I think I'd tell people. I was not tell people that I learned. I was trading many patterns and I had good trades. And apparently, most of the winning trades had a pattern, just like I said. So I realized that some of the losing trades that I was taking came from not having a consistent way of looking at markets. Like I'd be trading today like this, tomorrow like this, the following day like this. So that really messed me up. That was one. And two was indiscipline. So I was not very disciplined in following some rules.
This is what, like, you even have a plan for
Exactly.
it.
Self-sabotage. Like, this is what I shall be doing. And I think that comes again from the frustration and if you're not aware of these things, they may really hurt you. So the frustration that comes from losing makes you prone to make bad decisions or to be indisciplined.
Worse decisions.
Exactly. So you find that maybe you make the first, second, third decision, and the first 3 decisions were right, but the markets never cared, so you lost money. Then you take it personally. So you decide, sasa you may lose. Now I don't even have anything now anymore to lose. Sasa ni kuingia. So unaingia to any positions, you're trying to make money back. Unconsciously, these things happen unconsciously.
Yeah. At the moment you always think you're right. You're doing the right thing.
Ukireflect back ndo unasema, okay, now I see how I was making some mistakes. So I think those were some of the main reasons why I was not inconsistent in my early days. And I think that's again a stage of a trader, because you can't learn how to manage yourself without trading.
Yeah.
You can't learn which patterns
to lose
trade.
so that you change what you are doing wrong.
Exactly. So
for me, I think also I had that problem of discipline, because I had a very, very detailed trading plan, and you remember, and I still blew an account. It's because, like, you're not disciplined to follow your rules.
Yeah.
And that's self-sabotage, as you said. Like, you shouldn't do this. How on earth did I have 4 positions on oil? How on earth?
Hata uelewi bado aje.
Exactly. But for the moment, ilikuwa sawa.
Niko sawa, nimemendo, niko fiti.
Exactly. So, like, that discipline, and I think we always stress that discipline of a soldier in markets is very, very important.
Very.
Ile yani unajua sifai kufanya hivi. Hata nini ifanyike. Hata uniforce, hata unichape makofi. I won't do it.
I won't do this.
I won't do it. So that discipline really, really helps us
because like simple things like even entering a trade without the signal.
Man.
The signal is part of the criteria.
Yeah, exactly.
Lakini sasa uliona set up and then now you decide acha tu nichukue hii. And especially when you don't have a trade.
Yeah.
And that's one thing I've observed. If you really want to become a good trader, and that's what I'm really practicing, be very comfortable not having a trade even when markets are moving. Like just be very, very comfortable bypassing some opportunities, waiting for the perfect ones. You get, like, there was someone who was saying, in trading, you make 90% of your money with 10% of the opportunities.
Exactly.
So the good opportunities will come very few times. You make a killing and then you go back on a spree of not having anything to do in the markets, especially if you have a stringent process, like a very detailed process of keeping you out of the market. Then you'll find that most times you really don't overtrade. You don't, you're just and out of the market.
As I was saying, like, if you don't have that stringent process, we always say, like, how markets are meant to fool you. Utaona hizo pattern. Utaona trades zitakuwa zinakam. Utakuwa unatake tu lakini unashanga. And that's why now inconsistency comes in. Like, hauna stringent rules on what you shouldn't do.
Yeah.
Unapata, like, as Gitosh says, a month can go and trade once. Na one trade imemekia enough for the month.
Yep.
So, like, you need to know, like how you approach markets yourself. I'm not saying you trade once in a month, but some months are slow months for you.
Exactly.
Some months your system is out of the sync with the market.
Yep.
So, second week of August, let's say next month, Magnus has come, Ken. And you check, you say the trend line third trend line bounce. Lazima tuke exposure bana. That is where everything goes to the trench.
So, there's that aspect. You need to be very patient.
Yeah, very patient, like accepting that you don't need to trade every time.
Yeah.
You need to be in the job, yes, but you don't need to trade.
You'll watch markets. Yes. Because opportunities again won't ring you. Now we are available. No, you have to look for them. You have to keep stocking markets. Yeah. But you don't have to keep trading.
And I think that's the disease of, like, I think from also interacting with the traders has really, really helped me improve my trading personally.
Yeah.
Because you see those negative, bad patterns in them.
Yeah. And you're very objective when you're watching someone trading.
Yeah.
And you can see the mistakes.
Someone is telling you, Taras, a whole week umechukua trade moja. How will you make money? ujama amesahau me my main job is not even to make money, it's not to lose money that I have. So it's okay if that month ends I'm at 0 or 1% up.
Yeah.
It's very, very okay.
It's fine.
Then I do some shitty mistakes, I end up the month -5% down. You see?
Yep.
Eri nibaki na hiyo 1 or 0 because I didn't have an opportunity for the whole month. Then sasa niliona kuna opportunity nikachukua trend line.
Acha nianze kufanya vitu yangu.
Nikachora hata sijui kuchora. See, so like in consistency, it's all about consistency. To create consistency you need to be consistent. Inaanzia hapo kwanza. Be consistent in trying to create consistency in trading. The moment bado unafanya vitu different every time, you won't get that consistency
in the market.
It will be very, very elusive. Itakuwa inakujanga, you make some money here, at the end of 3 months unashanga, hey, there was a month I made about $1,000. Ilienda wapi? Markets took it.
Yote mpaka unasema nilikuwa na wina nyingine kubwa,
like uioni
sioni. Because uko na hiyo habit ya kuchukua suboptimal. Kwanza if you can avoid taking suboptimal trades,
utakuwa umejisave sana kwa markets. Like
trades which don't give you a signal, trades which are not in your framework, trades which you had not planned for.
And as we said at FAB, we always try to take grade A++
trades. Yeah.
Like see, not just grade A ama grade B, grade A++. Like trade may tick all criteria. Risk iko sawa. Psychology yako kingia market ilikuwa sawa. Like you're very, very confident in the trade, you have accepted the loss. So unaingia trade nyingine hata kwanza loss uja accept kwanza. Ikianza tu kwenda negative uko active kwa market, hata uongee na wase wengine kwa office. See, like you're just stuck on that trade. Hey, inauma bana. 1 pip ni $10 kwanza. And you have a $500 account. You won't sit right. Exactly.
And that's one of the things again. Trading at a very large position size for your account can kill you very fast.
Emotionally fast. It starts there because
financially
that's where loss trap comes in. Trust me bro, you can't get a loss trap ukiwa na $5 loss, $10 loss.
Yeah. You'll cut it.
We always say it's way psychologically harder to cut a bigger loss than a small loss.
Yeah.
I had a $5 loss. I couldn't cut it. Do you think cutting a $10 loss would be easier or harder?
Harder.
Even harder. $30 loss, 50, and that's when you blow an account in a loss trap. It's hard to cut a bigger loss. So always cut the smallest loss you can. If it's 1%, stick to it. Usipush at 1.5, stick. If you cut 1, cut it. Maybe the opportunity will recorrect, the market maybe will form another setup, you'll come back in. Like at the moment you want now to stick to that trade, kuna news in a come.
And you know there are biases, eh? Exactly. Some of these things are biases. Like I was thinking about the gambler's fallacy, one of the biases that I've been exposed to personally. The idea that nimelose sana, sasa nda win.
Lose ukilose tu.
Adia nimekuwa nimebet. Unajua like even in betting some of these things
gambler's fallacy actually comes from gambling, betting.
Messi wamelose, Barca wamelose sana, sasa watawin. My friend, haiwaki hivyo. Hiyo ni bias umejiwekea. It doesn't work like that. Kwanza if your system is negative, it'll lose too. So you need also to avoid some of these biases. Read a lot, man. You need to learn some of these things. It's very hard to succeed as a trader without getting educated on some of these things. You'll spend a lot of time thinking about how markets work, and you'll miss out on the most important thing, which is how your mind works and how you miss a lot based on how your mind is limited. And some of the things that you've been exposed to. So you need to learn to avoid some of these biases, like the one we just say, the gamblers, outcome bias, hindsight. That's another one that is so common. Like, usikianga watu wakisema nilijua tu itafanyika. Okay, ulijua. Ulijua tu itafanyika. It's because it's so easy when you look back to say I knew this would happen. And that's why trading technically is also very, very hard. Because when if your system is automated, if you're using, let's say, a robot, it's easy for you to detach from a loss. Because the loss is not yours, it's a robot. But now when you sat down and did the analysis, it's very easy for you to be attached to the loss. Because you assume, sasa si ningejua kumbe hii trade haitawaka.
True.
Ama after it's worked, you're like, kumbe. But you're not thinking about, at the moment of taking the trade, there's a lot that you didn't know that you now know. So a lot has changed about how the trade is or performed. Exactly. So you shouldn't be so attached to your system. Like, if it's a loss, it's a loss. Take it,
go
home, enjoy. Then wait for the next opportunity, man. It always comes. there's always an opportunity. The higher chance is the opportunity will come and you won't have capital. But opportunities will always end very, very good opportunities.
Yeah.
Like if you're just patient in trading, like kuna opportunities inakujanga hata ni $1 million opportunity. Unaona hii trade ime align kila kitu. Everything is so perfect. And that's one of the things that I observed. I'd have some of those very, very good trades. But pia, I had very many bad trades.
Yeah.
Asa, all the money I made from the good trades, bad trades kwanza inachukua. Ujulikuwa kila siku unataka kutrade. Ndani in day job. You see day job? This is a job where you'll be on the job, but you don't have to be productive. And again, it's a toxic belief.
How?
Like I always tell students when they come to the office, there's some beliefs if you hold in the market, you lose money. For example, productivity equals to always trading.
Man. Jamaa
leo sijakuwa productive. Kwa nini? Sija trade jo. Hey. It's not like that.
There was one student who came to not to the office. He sent his screenshots to the group. He had like 20 trades on one pair. 20. That guy is busy. Sasa yeye ndo kutrade sasa.
Exactly. And I assume that's the thing. Kuwa busy ni kuchukua multiple positions. Hey. No. So just watching markets, doing your reviews, stocking markets, that's being productive in trading.
Yeah. Journaling.
And that's why I always tell students when you're learning how to trade, do not assume that you're making progress when you start making money. When you start trading live, you're making progress if you're learning how to just analyze markets.
Yeah.
If you're just learning that, unconsciously you're making a lot of progress. Because your mind learns how patterns work. It observes some of the... If you equate progress to just... Like linear thinking is very, very wrong. Like that's what
don't work in a straight line.
Exactly. Things don't work in a straight line. Things take time. Most times it's an exponential curve. It's not a linear one. So you may spend a lot of time just learning how to analyze first of all. Then you may need to spend a lot of time just looking for capital. But when things pick up, man, everything that you are doing makes a lot of sense.
Yeah.
And that's how the trading world works. And I think also in business, it's the same.
Same thing. Trading is a business.
Exactly. It's the perfect answer. Trading is a business. So actually, some of the lessons you get from trading apply in real life business because we also have a business in
that's what you were talking about in the previous podcast.
Yeah.
Like things we've applied in real life.
Exactly. Yeah. And you can listen to it and learn a few things. It will be coming up on Friday, I believe.
Yeah, I think tomorrow.
Yeah, so tomorrow. You learn a lot about some of the things trading has taught us. Like, it's just...
It's a lot.
Also,
it's a lot. I think I have another point, which is you need to take time. After learning all that, you need to take time now to solidify your mentality.
Your thinking.
Yeah. The reason why people break rules, become indisciplined, is because they've not solidified their mentality.
They've not thought hard about the consequences of indiscipline.
Yes. So we call it mental gym. Like take your unaona so in the gym say body ni ukimpiga ngumi kwanza wewe unaenda hiyo side nyingine. So like your mind should be that solid.
Yep.
Like bad trading ideas come, they get rejected.
Inajua hizi fit
comes, they get rejected. But I guess indiscipline comes na inaingia ndani. That's when it shows your mental framework is not solid. Ina reject bad ideas. Reject bad those toxic traits. And
it's unconsciously, not consciously.
Until you develop that, like you know consciously now that this is a toxic idea coming to me. Like I just want to revenge trade. If you don't notice a revenge trade, no jambetaras, you are revenge trading.
You'll never ever make money.
And you won't know even you're revenge trading.
Yep.
So being aware that I'm just about to revenge trade, you'll easily now fall back from it.
Yeah.
Because your mind is already telling you what you want to do. But the moment your mind is not telling you what you want to do, itakuwa tu inafanya. So your mind needs to speak to you. Ikwambia ilawi. Do you want to take this trade? Is it rational? Like take some time to think before you enter a trade.
Has it adhered to your process?
Exactly. Like the moment your mind is still flaccid.
Skuma
huko. Hey, trading nakwambia my friend, this stuff ni emotional. Ile yani strongly emotional and most likely you'll fall short of that.
Yeah.
Utasema ni Friday bana, hii week era sijaunda 1%.
Acha niunde. And that's why you take the bad trades.
I think that like taking your mind to the gym is very, very important. Like solidify being patient. Unajua being patient pia ni ngumu sana sasa ukwe patient afu in a flash of a second uache kuwa patient.
Ni lose patience.
Lose patience easily to unaingia that bad trade. Signal ijakami, maybe unajua nikingoja tu New York ipite tu for the first 30 minutes naweza pata a good setup. Unaingia saa hizi.
Yep.
New York inakami na kuspike out, market goes
to your direction.
It's because you lost patience for a few minutes to actually it was a second decision, a microsecond decision.
And it cost you money.
Buy or sell. Hivyo tu inakucost. So like always talk to your mind before you make a decision. Like,
yep. Be conscious.
Converse with yourself kwanza. Alafu sasa usikie market inaniambia nini.
Alafu make your decision.
Alafu make it. And the moment market inakwambia ushafanya. Itakuwa ina talk to you every time. Taras kuna ka trade. Unachukua. Yaani hata uangalie risk, uangalie psychologically am I in the right state to trade. Sometimes also you're not even in the right mental framework to trade. You're stressed maybe.
You have other issues
maybe from home, family. Sasa unakuja kuleta hizo issues kwa markets. Mata wasema wanijue so leo ni rep hizi markets kwa. That's the markets now reps you fully. Like you lose your bankroll to the cent, unabaki zero. I think that's blowing accounts aki ya Mungu. Your stuff inakuanga tormenting. Because one una realize fuck now besides even losing money I'm out of my job.
Siwezi hata watch tena. Siwezi hata trade tena sasa.
Nimefunga job jo. Hiyo kitu like mentally if you don't solidify your mentality most likely trading as you say it's there to fool you. So like learn, is the market trying to fool me? Yes. Stay away.
Yeah.
Is the market trying to fool me? Yes, una stay away. No, una take the trade. Am I in sync with the markets? Yes. Am I in sync with the markets? No, una stay away. Like talking to yourself. Converse with yourself and now converse with the market. In the moment market ndo inakuongeleshanga, most likely you won't become consistent because the markets will always like they are random, you see. So the moment you're moving with the markets, something that's random, you'll always be random in your outcomes. But the moment markets do not talk to you randomly, but you have a solid stringent framework in your mind that you follow. Like this randomness yes will come, but that one thing will come and you'll take it, you see. But the moment you're also so random in markets, that's when now it's inakuchenga tu psychologically. Utaingia tu hizo trades. So boiling down is after learning systems, after learning you need to be disciplined, umeback test, learn strategy. That mentality too. It all because trading is about decision making. Yeah. From start to finish. Should I enter here? Yes. Should I exit at this point? Yes. And in decisions unajimekia. So those decisions, you really need to make sure your mind is giving you very, very right solid decisions. And the right decisions. The moment your mind is like is being carried by the markets, you're going to be making solid decisions. Yeah. And I've just said, most people now don't know that weakness other than weakness ya market. Ajui ni weakness yake. My market ziko random, hata nimestopiwa out nini. Ajui manze uliingia trade due to being impatient. Unaona? Nimespikiwa out hiyo loss iko sawa 1%. Yes, it's a disciplined loss lakini uli break just one rule but ukapata loss. So I think like that solid mental framework of how you approach markets, how you approach risk, how you approach position sizing, how you approach your own self. Knowing your own self, unajijua I'm a very very impatient person. What do I do to improve on that? Maybe you have a checklist. Una check ingine ikata, at least it helps you now to curb that impatience. Maybe you are aggressive and you've been losing so much on one trade. You go back to setting something that will help you now curb that risk taking, maybe over trading the reason. Like the moment you don't sit down with yourself to do like to see what is making you not become consistent. Yeah. Apo, that's where you go wrong.
That is where you go wrong.
Like take time, learn from your trades, like learn from your own self, learn from yourself. Jua, this is how I am, and improve on that. Like just in the office, we are very very different. Caleb is conservative. We are at least risk takers at some point, but we don't take also like risks that kill us.
Exactly. We're still surviving. As much as you're aggressive.
Yeah, si ati ile kujiwa. So like you understand yourself. Yes, I'm aggressive, but at this point I should stop trading.
There's a limit to my aggression. Yeah.
Exactly. So the moment you don't know such nitty-gritties in trading about yourself, about markets, itakuchenga tu bado.
Baya.
So trading, like, it takes time because it has a lot of nitty-gritties. Vitu ndogo. Yes, like kuna 3 things: psychology, risk and systems. Lakini size of vitu tatu na ziko systems, ziko na back testing, forward testing, chart work, journal,
technicals, fundamentals.
Asa ukuje kwa risk, kuna vitu more: position sizing, risk unafaa kuzielewa zote na zi make sense practically. Uende useme hii position sizing, si ati theory utasoma uende uitry
uone
inawaka kama iwork. Because Bantapa has like 5 positioning strategies. You need to test them. When hata most likely you were using them before auko unajua unconsciously. Unaona kumbe ndio ile Bantapa alikuwa anaongelea what that was killing me. Exactly like. So I think it all boils down to just seeking knowledge first. Understanding that markets is not what is being preached. Markets is for the big fish. I think we always say this: our breakthrough will come when we start trading millions of dollars. Hii bado tu ni foundation tunaunda the first 5 to 10 years.
It's just
na msiana kuona lawi huko fiti ku trade ndio bado bana, capital haijafika. Like
when you start leveraging now on the skill,
exactly,
that when it makes a lot of sense.
But now someone hata ajui kumbe kuna hata hiyo level. Some student was so shocked that people trade $1 million.
Seriously? And $1 billion?
As a year,
$100 billion.
At even nikipata tu $1 million. Hiyo niko sawa kabisa bro.
Only.
Okay. Jamaa elewi power. Elewi yani msa elewi market sana ni akina nani. Elewi kuna watu wana trade $50 billion.
$1 million is even for a retail.
Ni a retail trade unaona. Jamaa hata elewi kwanza kuna institutions zina
take advantage of the opportunities
kwa markets. So like understanding markets, like how markets work, is very very crucial for you developing your consistency. Like understanding how markets work. Your kitu ndo I think most important.
Understand
how markets work.
So I think we've covered a lot. We've covered some things that are very very important, and I think we've come back down to the conclusion that one, you need to understand how markets work, and then you need to understand yourself. Those 2 things, after you do them, it's very easy for you to make money in the markets.
And understanding yourself comes down from that mental gym. Like after you have learned all this, formulate a trading personality that suits you. Now be disciplined to follow it. The moment you have discipline and your mental toughness, you will easily break a good system.
And
uta make money for 5 years in one day, like Anthony, out of business.
Just because you threw away simple
things.
Rules.
Exactly. It all boils down to mentality yako. Always make sure you're in the right framework mentally to trade. If you're not in that framework to trade, just watch markets. Close your brokerage account. Watch markets from trading view. Just like let markets do what markets can do. Most likely, we will say, these markets have been here since 1800s.
And they'll always be.
We'll die.
Tayacha.
We'll leave it here. Our kids will see it. Na iongeangi na mtu. Hainanga emotions. When uko na emotions hapo, ulikuwa sijui ukafanya vitu zako, it killed you. It didn't even say sorry. Kaendelea tu kachukua pesa yako, raidali huko akaunda do. Ukatoka kwa business. So I think we've talked about some few nuggets here and there that if you try and adapt to them, like learn from what we've talked about, like I'm sure these challenges si zangu na zako pekee.
It's common.
These are all traders.
And I feel like that's also what makes trading, like one of the things that I've also been thinking about is I like how trading is not challenging for one person.
Exactly.
It's challenging even for the institution.
Even for the institutions. We're talking with Francis.
A team of 100 people, they have
research
best
team.
Algorithms, they have bado inawachenga. It's not only you. So that should give you a lot of comfort in your trading also. And then you're learning how to trade.
You're not suffering alone.
Exactly. We are many. As much as someone else you think they're making money, challenges are trading ni zile. So learning how markets work. Enroll to our courses, you learn how markets work. So we have a couple of courses. And what you can see, you can get an in-depth analysis of some of these things, some of the strategies you use, how to backtest.
And we have courses for both beginners and someone who is struggling with consistency.
Exactly.
So if you're struggling with consistency, we have a 1-month course. It goes for only 20,000 shillings. It's one-on-one. We sit down with you for about 8 sessions, 2 hours every time. And trust me, the amount of value come with it out of class might change your perspective in trading. Like most people lose so much money. $200 bro ni pesa kidogo sana kulose kwa markets. Just because you didn't seek advice from someone. Exactly. Like even buying books. Mtu anaona kitabu ya trading mjini 5,000. Hataki kununua. You lose that 5,000 in one day.
Trading,
So invest in knowledge. Invest in getting the right path of trading.
Exactly. And it's a powerful skill.
It's a very powerful skill.
I think people should understand the power of trading. Like
very worth it.
If you know how to trade and you're a good trader, one, it's a powerful skill because it's not easily replicated.
Yeah.
If I'm a good trader, you can't just easily copy me. It can to me strategy to me. It's in my mind. It's not in the strategy. So it's not easily replicated.
Yeah.
Two, it's challenging. So the fact that it's challenging makes it more valuable because hard things are valuable.
Yeah.
Rarely will you find something easy valuable.
Yeah.
So if you spend so much time trying to be a very good trader and you find it very hard, I think that's when you should even spend more time and more energy because you understand the value of something. The value of something comes from how difficult it is for people to attain it. And the third thing that I think makes it very valuable is the fact that it's rare.
True.
Trading talent is rare. It's not everyone who can afford it. So the few people, the few people who have the talent are perfect. Like it's a gem. It's something that you can't just get anywhere and everywhere. So I think that's enough for today.
Yeah. Also, another thing that might help you also improve your trading is at least seek funding, like funding that makes sense.
Yeah.
Above $1,000. There are many funding programs right now running.
Yeah.
We have one. There are many others you can research on them. So at least stop trading $100, $50, $30. Someone is trading a $30 account.
Funding ndo uanze.
Exactly, man. So trading a $30 account, $100 account, most likely you won't be consistent.
Yep.
Just watch markets. Even $500. Just watch markets. Yeah. Just try and develop your skill of watching markets. Save up. If you can also save up to at least your own funds to at least over $1,000, that's reasonable to trade. Yeah. But if you can't get that $1,000, there are avenues to get trading capital right now. We have one funding program. We fund $1,200, so it's a reasonable account for someone starting out to trade.
Yeah.
Someone just wanting to at least get into live markets. Because also capital has been a very, very big problem for many people.
Yep, including us when you're starting out.
So when you're starting out. And then a $300 account, tukaiblow.
Very fast.
Exactly. So like try and trade capital that makes sense. Don't waste time with a $10 account, $50 account. Most likely you're actually wasting time. Yeah. So try and look for capital. There are very many avenues. You can do your own research. So I think that's it for today.
Yeah. And then also position yourself in a position where you're likely to succeed. Why am I saying this? Don't jump into trading and you want it to pay your bills in the first 2 or 3 years. You're positioning yourself for failure.
Failure, yeah.
So position yourself strategically. No, when I'm going into this thing, this is the plan.
Yeah.
And maybe for the first 2 years, I'll have this side hustle, but I'll invest a lot of time in understanding markets. I'll save up enough, then I can jump now into live trading. Like, position yourself at a chance where you stand a chance to succeed. Like, usijieke tu mahali yoyote udhani vitu itafua. Like, try to be strategic in how you position yourself. Like we always say in chess, like when you're playing, try to know the pieces which you need to remain with, the ones which you can sacrifice.
Exactly. Where is my next 3 moves?
Huyu jamaa anaenda wapi? Atafanya aje? Bas. So like you need to that came from chess. You need to know how to position yourself in a position where you can win. Not even really win, but you stand a chance.
Yeah, stand a chance to win.
Like uko na position yako si mbaya, lakini ukipata pawn iko huko, bishop alienda, knight hauna, queen umemexpose, my friend. That's the same thing in life.
Yeah, in life.
Just try to be strategic in how you make your decisions, and then you can stand a chance to succeed or to become someone valuable. So we'll stop there. We'll catch you guys in the next one, episode 12. Probably we'll have a guest. So we'll see you guys.